Today, we lowered our policy interest rate by 25 basis points.
To many Canadians' relief, the Bank of Canada's overnight lending rate has been steadily declining, and the bank hopes that reduction will combat inflation. But for Canadians shopping around for a mortgage, a lower lending rate might not translate into a lower mortgage rate.
We get phone calls from clients all the time who ask, hey, we heard the Bank of Canada dropped interest rates. And it's funny, they go, so did my fixed rate go down too? And you go, oh, just a second, you got a couple minutes to chat? Let's go through this. This conversation might be a little longer than yes or no.
And to be clear, variable rate mortgages, those are tied to the ups and downs of the Bank of Canada rate. But we're talking about fixed rate mortgages. Now, they are exactly like they sound. The rate is fixed. You get one rate from the time you sign until the term is up. So someone looking to get or renew their mortgage today, those are the people looking at the fixed rate not going down and saying, what's up? So we asked a few experts to explain it to us as simply as possible.
The most common misconception about fixed rates is that they are tied in a very direct way to Bank of Canada decisions. They are not.
The fixed mortgage rates are linked to the bond rates in financial markets. If we take the 5-year fix, it will move relatively closely to what's happening with the 5-year government bond yield here in Canada. When we look at the 5-year bond rate, it's kind of a very quick and dirty way of seeing it. It's the average overnight rate for the next 5 years. Whether it's accelerated by a couple of months or not, it doesn't make a big difference on the average level for 5 years.
If we lost you at bond rates, here's what that means. Bonds are an investment tool to help governments and corporations raise money. Investors buy a bond at a guaranteed rate of return and for a set amount of time. Could be 6 months, could be 10 years. So if you put in $100 at 3% for 1 year, you get $103 back, no matter what the market does. Bond rates, the return you make on your investment, are adjusted to account for perceived risk in the market for the length of that term. Banks take a similar approach with fixed rate mortgages, with a bit of overhead and profit added in. Recently, fixed rates have trended up, making it more expensive for those renewing or signing a new mortgage. Fixed rate mortgages have traditionally been the option for those looking for predictable payments, but experts are saying the economic environment is becoming way more unpredictable.
We're thinking in terms of 25% on Mexico and Canada.
Part of the reason is that Canada is not an island. Our financial markets are very much influenced by what's happening in global market, especially south of the border. And our interest rates move often in sync with what's happening in the US.
Everyone's nervous, and us included.
We're definitely in a very, very different world. And right now, it's Donald Trump's world. It's Trump today, tomorrow, and all times in the future until this tariff issue is settled.
And it's not just the potential of tariffs on all Canadian goods heading into the US.
It's just a lot more uncertainty. We know he's going to announce things last minute without any forward warning, or he will announce something, then delay it, and then coming back. So it's a lot of keeping ourselves on our toes.
There's never been anything like this.
At this stage, it's really difficult to determine a direction. And I think that's a challenge, especially for individuals like myself who are tasked to provide advice.
So if the experts are struggling with this level of uncertainty, what does that mean for the average person trying to borrow money for likely one of the biggest purchases of their life?
We were telling clients go variable. That was until the recent election of Donald Trump. That was the most rational approach to how to look at mortgage rates.
And if the word variable reminds you of this?
It's been incredibly difficult. Our mortgage is astronomical.
Nearly 1 in 4 homeowners say they will have to sell their home if interest rates go up further.
Their rates are only making things worse for the housing market.
A lot of people just got a tremendous beating when they were on variable. You know, they went from a mortgage of 1.45 all the way to a mortgage of 6.25. I mean, it was a terrible, terrible experience. But in the end, the funny part is that the reason they took variable in the first place turned out to be true. On average, variable will eventually return to its positioning in the rate world. And it has, and it continues to. It's tough. It's a human sentiment is that when something goes wrong, I never want to touch it again, even though there's a logical reason why it might be the best deal.
Your decision may just come down to your risk tolerance.
I have a large group of folks who feel very comfortable paying a higher interest rate on a fixed rate mortgage, knowing that they have a concrete contract with the bank. So if interest rates were to go up, down, inwards, outwards, blue, green, or other, their payment remains the same. Versus on the variable side, they tend to be more price conscious consumers and folks who are really looking into that crystal ball in the future.
So what do our experts see in their crystal balls?
I don't even want to guess where bond yields are going to go, because what we have with bond yields is traders trying to predict the outcome of all this extreme volatility. Now, they tend to be conservative, so we'll probably see a pretty quick jump in fixed rates in Canada. We tend to say today variable may be the way to go, but if you want a fixed rate, take it now, because we have no idea what's going to happen to fixed rates in the next 3 to 4 months.
It's interesting to see. I think Canadians might be in a holding pattern, or might be in a shorter, I'm hoping shorter, but may potentially be a longer haul before they see some of those lower fixed rate interest rates that they enjoyed in previous years. I like the terminology that you date the interest rate and you marry the home.
One thing our experts can all agree on: ask questions before you say "I do" to your next mortgage. Caroline Ferris, CBC News, Calgary.